Silver has captured the attention of investors everywhere. The price of this essential metal has surged past $36 per ounce, reaching a level we have not seen in over 13 years. This is not a random jump, it is the result of several powerful forces coming together at the same time. Think of it as a perfect storm for the silver market. We are seeing a combination of growing industrial needs, a weaker US dollar, and a serious shortage in supply. Each of these factors alone is significant, but together, they have created an explosive environment for silver prices, pushing them to remarkable new heights and signaling a major shift in the precious metals landscape. One of the most important drivers behind this surge is the weakening of the US dollar. When the dollar loses value compared to other world currencies, it takes more dollars to buy an ounce of silver. This makes silver, which is priced in dollars, appear cheaper for investors holding other currencies, which naturally increases their buying interest. Recently, concerns over US government spending and decisions that have increased the national debt have put significant pressure on the dollar's strength. As a result, investors around the globe are looking for safe places to store their wealth, and precious metals like silver have become a very popular and logical choice for protection. At the same time, the demand for silver from industries is stronger than ever before. Silver is not just a monetary metal, it is a critical component in many of the world's most advanced technologies. From the solar panels on our roofs to the smartphones in our pockets, silver's unique properties make it irreplaceable. This industrial demand creates a solid base for silver's value, one that is not solely dependent on investment trends. As the world pushes forward with green energy initiatives and technological innovation, the need for physical silver is set to grow even more, providing a powerful, long-term tailwind for its price. Finally, we cannot ignore the simple economics of supply and demand. For the fifth year in a row, the world is using more silver than it is producing. Mines are not discovering large new deposits, and the amount of silver being recycled is not enough to fill this growing gap. This situation is called a structural deficit, meaning the imbalance is not a temporary issue, but a long-term problem for the market. When demand consistently outpaces supply, prices have only one direction to go, up. This fundamental imbalance is perhaps the most compelling reason why silver's recent price performance may just be the beginning of a much larger move. The industrial appetite for silver is a primary engine driving its price higher, accounting for more than half of all silver consumed globally each year. This is not the silver you see in jewelry or coins. This is silver at work in our modern world. It is a key material in the green energy revolution, especially in the manufacturing of photovoltaic cells for solar panels. As countries and companies race to meet their climate goals, the installation of solar farms is accelerating, which directly translates into massive ongoing demand for physical silver. This connection to the green economy provides a stable and expanding source of consumption for the metal. Beyond solar energy, silver's role in electronics and the automotive industry is absolutely critical. Its exceptional conductivity, the best of any element, makes it essential for everything from printed circuit boards in our computers and mobile phones, to the complex electrical systems in modern vehicles. As cars become more like computers on wheels, with advanced driver assistance systems and countless sensors, the amount of silver used in each vehicle continues to rise. The global push to expand domestic manufacturing, particularly in the United States, is expected to amplify this industrial demand even further, creating even more competition for a limited supply of the metal. While industrial use provides a strong foundation, the recent price explosion was ignited by a surge in investment demand. A key moment occurred when silver's price broke through the long-standing resistance level of around $35 to $36 per ounce. For traders who study price charts, this was a major technical signal. It was like a dam breaking, unleashing a flood of new buying activity. Momentum investors and large funds who had been waiting on the sidelines suddenly rushed into the market. This wave of buying created a self-reinforcing cycle, where higher prices attracted more buyers, pushing prices even higher in a very short period. This investment rush is also fueled by silver's relationship with gold. For a long time, silver seemed undervalued compared to its more famous cousin. The gold-silver ratio, which tracks how many ounces of silver it takes to buy 1 ounce of gold, has been falling. This indicates that silver is starting to outperform gold, catching up after years of lagging behind. Investors see this as a sign that silver has more room to run. They are buying silver not just as a safe haven, but also as an asset with the potential for much greater percentage gains than gold, making it a compelling choice for those seeking both safety and growth. The story of silver's price is deeply connected to a fundamental and worsening supply problem. The world is experiencing a severe and persistent structural deficit, meaning that for 5 consecutive years, global demand has significantly exceeded the total supply from mining and recycling combined. This is not a small shortfall. Since 2021, the market has had to draw down an incredible 800 million ounces from existing above-ground stockpiles just to meet the demand. These stockpiles are not infinite. This continuous drain on available inventory creates immense upward pressure on the price as users and investors compete for an ever-shrinking pool of available metal. One of the core issues is that silver production cannot be ramped up quickly, even when prices are high. A vast majority of silver, over 70%, is not mined on its own. Instead, it is extracted as a byproduct from mining operations focused on other metals like copper, lead, and zinc. This means that the decision to open a new mine or expand an existing one is based on the prices of those primary metals, not silver. Therefore, even a soaring silver price does not automatically lead to more silver being produced. This inelasticity of supply is a crucial factor that distinguishes silver from many other commodities. The situation with recycled silver is not much better. While recycling does contribute to the overall supply, it has failed to keep pace with the explosive growth in industrial consumption. Many of the modern applications that use silver, such as electronics and solar panels, use it in very small quantities that are difficult and often uneconomical to recover. As a result, a significant amount of the silver used in industry is effectively lost forever, unable to be reclaimed and returned to the market. This low rate of recycling further tightens the supply noose and adds to the long-term deficit that supports higher prices for the foreseeable future. This combination of stagnant mine output and inadequate recycling creates a powerful long-term bullish case for silver. The supply side of the equation is remarkably rigid and slow to respond to market signals. Meanwhile, the demand side, driven by both unstoppable industrial trends and growing investor interest, is dynamic and expanding. This widening gap between what the world needs and what it can produce is the central reason why many believe the current price surge is not a temporary spike, but the beginning of a sustained revaluation of this critical precious metal as the market slowly awakens to this reality. With silver prices breaking out to multi-year highs, the big question on every investor's mind is, what happens next? Many market experts and analysts are looking at the current momentum and strong fundamentals and are forecasting even higher prices. A common target being discussed is the $40 per ounce mark, with some strategists suggesting that a move toward the all-time high of around $50 is possible in the long term. They point to the ongoing supply deficit and relentless industrial demand as powerful forces that will continue to support the price, even if there are short-term pullbacks along the way. The fundamental story for silver appears stronger than it has been in decades. However, investors must remember that the path higher is rarely a straight line, especially for silver. The metal is known for its volatility. Historically, its price swings are often 2 to 3 times larger than those of gold. This is partly due to its smaller market size, which means that large buy or sell orders can have a more dramatic impact on the price. After such a rapid and powerful rally, the market is considered by some to be overbought, which means a correction or a period of consolidation would be healthy and not unexpected. Prudent investors should be prepared for potential price dips. The risks to the current rally are clear and should not be ignored. A primary risk would be a significant slowdown in global industrial activity. If the world economy were to enter a recession, demand for electronics, cars, and solar panels could decrease, which would reduce the industrial consumption of silver and weigh on its price. Another key risk is a potential rebound in the US dollar. If the Federal Reserve takes actions that strengthen the dollar, it would make silver more expensive for foreign buyers and could dampen investment demand, potentially leading to a sharp price correction as profit takers exit the market. In conclusion, the outlook for silver is a tale of two competing narratives. On one hand, the powerful fundamentals of a deep supply deficit and booming industrial demand provide a compelling case for significantly higher prices in the months and years ahead. On the other hand, the market faces the immediate risks of high volatility, potential economic slowdowns, and shifts in currency markets. For investors, the key will be to focus on the long-term picture while being prepared for short-term turbulence. The journey for silver is likely to be exciting and volatile, with both significant opportunities and notable risks on the horizon.